So Treasury bills are short-term instruments through which the government raise funds. The CBN recently actually issued some, and a lot of people trooped in to put their money there, wanting to invest. You know, it's sweet though, because you are assured of getting back your money as an investor and also getting returns. But something did happen. You know, when you get so many subscribers, one would think that because money is needed and the central bank wanted to raise funds through the treasury bills. But this time around, the central bank did not accept investment from all the investors. In fact, it was oversubscribed, but it reduced the number of investors that it took on. What could be that reason? Well, some analysts have said perhaps that signals a potential decline in interest rates as inflation had also dropped. What are the implications of this, and what does it mean for those who would want to make investment into Treasury bill? We have Vincent Oshoma, who is a financial and investment analyst, acting MD and Midpoint Capital Limited. He joins virtually this morning. Good morning, Vincent Oshoma. Thank you for joining us on the Front Burners.
Morning. Thanks for having me.
The CBN Treasury bills, which the CBN did not take all of the investors who wanted to put their money in the bank's Treasury bills. What's your take on that?
It just shows it's a reflection of the sentiment in the market. You know that the auction was done on the 19th, and just before the auction, they saw the January inflation results, and that shows a significant moderation in inflation figures due to the rebasing. So that is part of the thing. And if you look at the bids for that auction, it was also a reflection. You saw a lot of investors going for the 1-year instrument, and while the other instrument that were on offer for the 91 days and the 182 days were undersubscribed, the 1-year instrument was oversubscribed. And so the CBN, looking at investor sentiment and also looking at the realities in terms of inflation, so they had to significantly reduce what they took from investors. But it also shows that we will also look at it critically. What was on offer, what the CBN had on offer was 500 billion, and they actually took 700 billion, which is above what was their initial plan. What was in their initial plans.
Is responsible for the high investor interest in treasury bills.
The inflation figures that came out show that there's a moderation in inflation. So a lot of investors will want to go for lock-in rates. That's why you saw people pushing for the 1-year instrument, and you saw less attraction for the short-term instrument. So people want to lock in the rates as they expect that inflation will trend down. Once inflation is trending down, definitely government will be looking at reducing their borrowing costs. And that's also one of the things that the CBN is looking at. They don't want to borrow for the long-term instrument. So they had to reduce their borrowing for those instruments because inflation expects rate to trend down. And you saw that in the next meeting, the MPC meeting that was held after the auction, the CBN MPC decided to keep rates currently as it is, and with in view to start moderating as maybe at the next meeting. Everybody else.
Thank you for joining this morning on the Front Burner. What will be the likely implication of this decision of the CBN on the liquidity in the Nigerian money market?
Yeah, beyond the inflation, the Treasury bill auction, the CBN has other platform to manage. We have the OMO platform, and so they can also use that to manage liquidity in the system. And also you also notice that after the Treasury bill auction, there was also a federal government auction that was held this week. So I think those are other options that government also do in also to meet its needs, borrowing needs, and also to manage liquidity in the system.
Thank you. Thank you very much. I would like to ask, let's assume that the CBN had allowed those amount of people or the oversubscription to the treasury bills. Would that have fallen to a disadvantage on the part of the CBN, or is there any specific way it would have affected the money market?
It is the rates at the auction will determine the rates at the primary auction, determine rates in the secondary market. So like after the inflation figures came out, a lot of persons were looking up to the what will happen at the auction. And if you look at it, like I mentioned, investor sentiment was a major driver in what CBN did. Because if you look at the bids, we have bids between 16.5 and 25. And for the CBN to put a stop rate at 18.43 and still be able to meet its earlier target, it tells you that a lot of investors were at the lower end of the bid range. So that's why we saw that kind of structure. And also the CBN is also be looking at, the government will be looking at a way of managing liquidity. So that's where managing their borrowing rate. And that's why they have to put it at that, put a stop at that stop rate to look at what happens in going forward. So definitely invest, and you saw the next day after the auction, we saw investors that were not able to meet they're not part of those taken, have to go to the secondary market to have to meet their investment needs. So it's just a reflection of what is happening with inflation and what is happening with the system.
Okay.
Now, there are some persons who perhaps are watching us and wondering what a Treasury bill investment would mean for them. What benefits would they stand to gain, and perhaps waiting for the next open?
Yeah, Treasury bill instrument, they are short-term instruments that the government use in borrowing instrument by the government, and also used in managing liquidity by the CBN. So for the investors, they are risk-free instrument because it's backed by the full faith of government. And also the benefit for investors is that unlike normal other money market instrument or investment, Treasury bill, one of the benefits is the fact that you get to get your interest upfront. There's upfront payment of interest. So investors can actually get their interest upfront, or they can decide to get it at maturity. Is the fact that they are risk-free instrument and also short-term instrument for the government to manage liquidity, and also for the investors to manage their liquidity in the short term.
Okay. The 2025 budget is projected based on the assumption that we're going to drive inflation down by 15%, and that's what government is pursuing. And now we're also seeing that, like some analysts had suggested, that this might lead to reduced rate of borrowing, which of course is likely to increase the liquidity in this system. Don't you think that this policy of trying to reduce the rate of the Treasury bill will be counterproductive to the overall goal of having inflation come to 15%?
No, if you look at it, there are two factors you have to look at. The current rates that we have in the system, that everybody will agree that it's not sustainable if you actually want to grow the economy. Because having your MPR at 27.5, it means that business owners will be borrowing at a high cost, and that is actually affecting businesses. So definitely the government will always be looking at ways of bringing down the rate to be able to stimulate growth, especially when the government has a target of growing the Nigerian economy to a 1 trillion economy. So definitely that is part of the target. We all know how we got to this current rate level. That has to do with the government's target of managing the foreign exchange market, and also the issue of subsidy that led to spike in costs for the average Nigerian. So, and you have seen that at the end of last year, we have been able to get some level of local refining, which has brought stability to the energy market in terms of supply. Then you also look at the forex market, we have seen some level of stability in the exchange rate market. So I think with those things, definitely we expect inflation to trend down. And also the issue of rebasing, we also see like we saw a significant drop in the inflation. So that is good for the economy when you look at it from the other side, in terms that it will allow more investment, and also in the real sector. As regards the rates, definitely rates will trend down. You just have to use gain from one side and lose from the other side. I think it is more important for government to look at stimulating the economy, which is more beneficial for the average Nigerian than just keeping the rates high, which will not actually grow the economy. The rates hike was part of managing other factors like forex stability and also inflation.
Also looking at it from a different perspective, now the rates are low and it's likely that a lot of people may not want to do around Treasury. Is this sentiment going to tilt toward the capital market in terms of boost in the stock or, of course, in the rate sector? Which sector do you think will benefit from this decision of the CBN?
Yeah, both sectors will benefit because, like I mentioned, once rates start trending down, it means that there will be increased investment in the REIT sector. Then for investors that are looking for instrument asset that they can invest in, they'll also see a push into the equities market. Because when you look at it, the equities market and the fixed income markets, they are quite competitive in the sense that when there is Eichie rate, people look at the risk-free investment, the fixed income investments, they will actually move into the fixed income investment because the equities market is seen to be more risky compared to the fixed income investment. So definitely, once we see rates going down in the fixed income space, definitely there will be a move into the equities market, and that will also create opportunities for investors that want to take advantage of opportunities in the equities market.
Now, if we look at the way the Nigerian public and even investors from other parts of the world have been putting their money into some companies and businesses and governments. Now, for the Nigerian government, Treasury bills we saw over subscription. Now, when the banks too actually had IPOs, initial public openings, we also saw a lot of them having oversubscription. What would you say is happening to investor confidence around Nigeria?
Yes, definitely. It tells you that investors' confidence in Nigeria is quite high, especially for local investors. If you look at our market, which is one thing that is good, that have actually helped in sustaining our capital market, is the fact that a lot of the investors in our capital market are local investors. We have low foreign investors patronage, and that's one of the things that have helped in stability of our market. So to see that all those IPOs, all those public offers and right issues or subscribe issues, a lot of investors' confidence, and people are looking at opportunities in the Nigeria market. And we expect that as this is sustained, when we have more stability in the forex market, the foreign investors will also start looking at our market because everybody agreed that there are a lot of opportunities in the Nigerian market, especially when a lot of the fiscal issues that people were having concerned about have been taken care of. We expect that this year see a lot of investors, both local and foreign, taking advantage of opportunities in the market.
Okay, thank you very much. Now, whilst you were responding to my question initially, you were saying that one of the reasons why you gave one of the reasons as the government trying to cut down on debt. But if you look at it closely, Nigeria currently, the total external debt that Nigeria is owing, the portion of the World Bank is about $17 billion. And in the 2025 budget, we are having about 13 trillion naira budget deficit, and the debt servicing equally itself is running to trillions of naira, if not 14 trillion naira. Now, when you look at this side by side, how would you analyze the situation?
Yes, the major focus, as much as the government continues to borrow to fund projects, the government will also look at reducing the cost of borrowing. The cost of borrowing is a major focus for them. So whenever there are opportunities to reduce the cost of borrowing, especially with the expectation that inflation will trend downwards, they will definitely be managing their borrowing plans in terms so that they will not be borrowing at a higher level. Definitely, government will definitely have to borrow to fund projects because when, like the government will always say, when you look at the deficit we have, infrastructural deficit is quite huge. And when you look at the funding, the government currently cannot be able to meet those funds. And there is a limit to what they can get from those multilateral institutions. So definitely the government will have to go into the private markets to actually access funds for projects. The whole goal is that, which is always a concern for analysts and everybody, is that as much as possible, government should not crowd out private investors. And that's also one of the reasons why government also looks at its cost of borrowing, because once the government sets its cost of borrowing at a particular cost, definitely there will be a need for a risk premium for investors or private investors that will also be going into the market to access funding. That's why it's important the government does not hike its cost of borrowing so that other investors, private investors, will be able to access market at reasonable rate levels.
The 27.5% that was left by the CBN MPR is a comfortable ground for private investors to go in order to expand production?
Sorry, I didn't get that question.
Borrow at the moment. I mean, the 27.5% of the MPR at the moment. Do you think it's a comfortable ground?
No, it's not. It's still quite high when you look at the system, because once the MPR is at 27.5, definitely you will have to see people borrowing from the banks at something. So, but the fact that one of the reasons given for the CBN is the fact that with what is happening in the system, they cannot just start moderating the rate, but they tend to do that. So they have to watch the current, what is happening in the system in terms of the economy to see what happens, so that they will be able to manage it. But we expect at the next meeting, there should be a moderation. If things continue the way they are, we're going to see moderation in inflation and also the cost, that definitely the CBN will have no choice but to reduce rates.
But like you mentioned earlier, that the driver really for the growth in the Nigerian market, whether the money market or capital market, is driven by local investors. What should government do differently, or the authority do differently, to attract and retain foreign investors in our markets?
The main incentive for the foreign investors, why a lot of them have been on the sideline for quite some time, is the forex market, stability in the foreign exchange market. And you and I, we have seen some level of stability. And I think a lot of them are watching what is happening in that market to see how they are able to take action in the months to come. So with the level of stability we have seen in that market, I think we should be able to start seeing them coming into our market, both for fixed income and equities market or opportunities. The major thing that we are, because everybody all agree that the opportunities in the Nigerian system, economy, but the disincentive have been the volatility in the forex market, which we throughout every opportunity that may be gained from investing in the market for the foreign investors. That's what they have been looking at. So as we see more stability, I think a lot of them will start consuming the Nigerian market because of the opportunities that are in our market.
As we talk about foreign investors, so the Nigerian government at the time was issuing foreign bonds like the Euro bonds, and even at that we saw oversubscription. But recently there are discouragements at that, so the government should not do much of such bonds.
Yes, definitely. Sorry, I didn't get the last part of the question.
Okay, so I'm saying that even when the federal government of Nigeria tried foreign bonds like Euro bonds, there was oversubscription. But recently, some analysts are discouraging the government tolling that line by issuing foreign bonds. What's your thoughts on foreign bonds as a source of raising funds for the Nigerian government?
Yes, as much as there are opportunities for Nigerians to raise foreign bonds, it's always more sustainable for you to have your debt in your currency. It's more sustainable and manageable for the government. So that's one of the reasons why people will say that it's better for the government to issue local bonds. But you all know that the foreign bond, the major goal for those foreign bonds is for us to increase our forex liquidity, especially when we are having challenges in the forex market. I think that's the goal. And the government also took a new initiative, because before now we usually see the Euro bond. Also a new initiative by the government when they issue a domestic dollar bond and to mop up the forex liquidity by Nigerians in their DOM account. And it was quite oversubscribed, which shows that there's a lot of opportunities in that space too. And so I think it's always good for the government to look at more sustainable ways of borrowing. But it's, as they do, they try to balance it, bring in some level of foreign borrowing into their portfolio, but it's more in local currencies.
Recently, we also feel as that the CBN, to some large extent, had been defending the Naira in some sort. Do you think that Naira has eventually found its level right now?
No, not really, because most analysts will tell you that if you look at the Nigerian currency, when you compare it in terms of parity compared with other currencies, is actually undervalued. And so definitely the CBN is trying to bring some level of stability. You know, the reason why we are where we are has to do with some of the fiscal issues that we have, especially when we have over $7 billion in terms of the demands by foreign investors in the market that were not repatriated. And that was one of the targets by the CBN president, governor, when he came in, cleared those backlogs, over 7 billion. And recently, the outstanding backlog, there are issues around that, talked about settling them. I think that has also brought some level of confidence in the market, in the forex market, also with the other policies that the government has adopted. Then another thing we have also seen is the issue of local refining. You know, for our forex demand, one of a huge part of our forex demand is for energy importation of fuel. With local refining, it has drastically reduced that. And I think all those actions have brought some level, one of the reasons why we are seeing some level of stability in that market. With respect to the defending, like the clarification that has been made, part of the fund was in terms of that amount that was mentioned has to do with clearing the backlogs that the CBN had before now. So it's something which everybody's looking at where it gets to a level of stability. If we achieve that stability, like we have seen, the Naira trending down. We can see the Naira trend down for that, gains grant for that, so up to 1,200 levels. It depends on what happens in the days ahead, how we're able to manage our liquidity, and also our government actions are gaining ground in terms of one, increase local refining and also increase production for crude oil, because that also plays a key role in meeting our forest supplies.
You're not the only one I've heard spoke about the policies of the government and how the CBN's effort is consolidating that in bringing stability. But recently, both the parallel market and the official market in 2 years now, we're told, collided in the price of the United States dollar. And for others whom we have reasoned with, or I personally have reasoned with, they were expecting that probably the price from the official market should have gone down further. Why do we have instances where the parallel market and that of the official market prices are colliding?
You know, the CBN policy, the first policy that came from this administration, first of forex, was to unify the markets. And that was what people called devaluation, trying to unify the market, because both markets should trade closely. And that's why currently the CBN operates a system of willing buyer, willing seller. So if you have that kind of system, you should see that convergence in terms of the rates in both markets, because it's a system whereby those that you can sell at the price that you want to sell to the buyer. And also the policy that the CBN brought in to bring in transparency in the official market. I think those are some of the things that why we have seen a relative convergence in rates. And we hope that is sustained, because we shouldn't see a wide gap between both rates. There should be a little gap, and because of the way the market is operating. When you have a willing buyer, willing seller in the official market, and you have a willing buyer, willing seller in the parallel market, they should be quite similar.
About the parallel market, the recent CBN Forex guideline states that authorized dealers must report transactions to the CBN within 10 minutes of transaction. That automation, are we seeing that already taking place in the parallel market, given that a lot of Forex transactions happen in the parallel markets?
No, a lot of Forex transactions don't happen in the parallel market. When you look at the market, the size of the market, we have more transactions in the official market than the parallel market. But before now, because people feel that the parallel market is more of a willing buyer, willing seller, why the official market was highly managed. But when you have an official market that is not too managed, it brings a lot of transparency. And also CBN has also gone to bring a level of control to the parallel market, because there's a lot of things that happen in the parallel market that are not transparent. But so the CBN is trying to bring some level of transparency in the parallel market and put control in the market, so that you don't have people just distorting the market for their own personal gains. But so that's why we are seeing those kind of convergence. The The major part of the market, forex market, is the official market. You have more transactions, but volume of transactions in the official market than in the parallel market.
Recently, we see a CBN every other day, a new circular. Are we treading the right path? Are we winning? Or what do you think that CBN can really do to really stabilize the money market?
With the current situation that we have, the CBN needs to do a lot to bring stability to the market. And that's why you see them coming up with different circular, different policies. And thankfully, some of those policies have started impacting the markets with the level of transparency and also the level of the ground that the Naira is gaining. So the CBN needs to think outside the box and do a lot of things. Especially when you know, one thing you should understand that for us to have stability in the market, it is not the absolute responsibility of the CBN. We need also the fiscal players because market has to do with the demand and supply. So it's not about just demand, you also have to increase supply, and that has to do with export. So the CBN will have to do all that it can do and think of so many things to be able to manage stability, manage price stability, which is their primary goal. Then we also need the fiscal guys to do their own. But we have not seen much in terms of the fiscal players. That's why the CBN tend to carry a lot of the load and has to do a lot to bring stability to that market.
Again, also looking at the money market, capital market, as it were, as a station, our overall goal or objective is to see how we can disincentivize poverty, because we know it's a luxury and not many Nigerians participate in these opportunities that is in the money market. What will be your counsel to people out there this morning who are watching to see these opportunities and this is where they can stick and make their life better off?
There are a lot of opportunities in terms of financial assets, and the government has put a lot of opportunity created by the government, and also there are a lot of investment education. It's just that a lot of Nigerians are not taking advantage of those opportunities because, for example, the Treasury bill market may not be that a good opportunity for small retail investors. There's opportunity, but not that much. There are a lot of other investments they can take advantage of, like the government bonds. Every month we have the federal government savings bond where investors can actually, retail investors can invest for as low as 5,000 naira. So, and that market, that opportunity is for retail investors. They can take advantage of such opportunities. Also, we have the equities market where they can also go into get in touch with their stockbrokers and invest even for the public offers. We still expect to see more public offers and the right issues because some banks are yet to meet the target. And so they can also take advantage of those opportunities. Because when you look at the number of Nigerians that are in our market, investors, is quite low compared to our numbers. So a lot of Nigerians needs to come into the investment space to take advantage of opportunity, not just depending on government, because people are looking out for handouts from government. If they can take their financial goals in their hands, they can do a lot themselves. They're getting the right financial education and also taking advantage of a lot of opportunities that are available in the Nigerian market. As I would like to say something. One thing, when people look at Nigeria, they always look at the challenges that we have. Yes, it's good. It's true, we have a lot of challenges, but there's also a lot of opportunities. That's why you see a lot of foreigners. Why some Nigerians are looking at the next opportunities to leave the country. A lot of foreigners are looking for any opportunity to come into the Nigerian economy and invest, because such opportunities for returns for investment are not available in their own countries.
Looking at the role the money market plays in helping businesses and even governments to raise funds, do you think that Nigerian businesses or even the sectors in Nigeria had taken advantage enough of the money market? Look at what the financial sector is doing with the money markets. What do you think other sectors could do? Maybe like the telecom, apart from playing key at the capital markets.
Yes, a lot of investors, a lot of businesses are taking advantage of opportunities in the market. Because why I will tell you that is that if you look at the commercial papers that have been raised, especially last year, you see a lot of companies came, even the major companies, even the telcos, they came to the market for funding. through the commercial paper, which is a money market instrument. Even they saw some major companies accessing that market, because when you have a high rate environment, I think going through primary market like the commercial paper is a way they can get lower rates, and they have taken advantage of such opportunities. And we have also seen some that are also in the works, trying to take advantage of those opportunities for moderation, to take to raise money for short-term working capital and also for their short-term liquidity. So it's the opportunity is there. A lot of persons are taking advantage of those opportunities, and we'll continue to see more people take advantage of those opportunities as long as they meet the requirements.
Mr. Vincent, don't you think one of the reasons why we have little participation by retailers in the market is because not only do they not have an enlightened platform where they can get the information that is needed for them to go invest their cash in there, but also that is the market susceptible to manipulations where they feel investment may not be secured, or they have some form of distrust. How would you douse down such tendencies?
Yes, I don't blame them much for the distrust, because people are transferring the distrust for the system, especially for the political system, into the private market and into investment. I don't blame them too much for that. But beyond the distrust, there are a lot of opportunities. I think it's all about investment education and also the perception of the average Nigerian. So with the right enlightenment and education, I think they will be more informed, and also the perception will change. In terms of manipulation, to a great extent, our market is highly regulated, especially the capital market. There are a lot of things that you cannot just do. But people talk about the past. Yes, every economy is evolving. Yes, we have had challenges. Even in developed economy, we all had the issue of Enron, the issue of the issue of Lehman Brothers. We saw those issues, and we saw the government reaction to those issues to strengthen regulation, to strengthen the system. So every economy has its own challenges, and we have had our own challenges, and it has to do with how is government reacting, how are the regulatory authorities reacting to those things that are happening. And we have seen a lot of reaction, a lot of policies being put in place, a lot of strengthening in policies. And these are things to safeguard our market. Definitely, it cannot be totally foolproof, but to a great extent, a lot have been done, and our market is relatively safe for investment. Because I will tell you, if our market is not safe for investment, we'll see the foreign investors access our market like they did in the past. And like I said, the only challenge that a lot of them has to do with the forex challenge, volatility in the forex market, and also some fiscal issues. And a lot of those fiscal issues have been taken care of. And also, in terms of the volatility, we are seeing some level of stability, and I see them coming into our market. So if the foreign investors can come in, why can't Nigerians take advantage of their market and grow their income and achieve their financial goals?
Going forward, are we going to see a further de-emphasis on the Treasury bill market? And what will be the implication of that kind of decision on the Nigerian economy and especially the financial markets?
In terms of the rates, are we going to see rates trending down? Like I said, it is expected that we'll see rate trending down as inflation continues to trend down. So people are looking at what happened to the inflation figures, and also in terms of what happens in the market in terms of price. So I think that like it is expected, rates will trend down, because once inflation, especially expected to trend down, once inflation keeps trending down, definitely expect to see rates trending down. CBN will have no choice but to reduce the rates, because CBN definitely and the government wants to stimulate growth in the economy. You cannot have stimulate growth in the economy when you have your rate as high as 27.5%. So it is not sustainable. So it's something that both the CBN and also the fiscal managers, they want to see the rate trend down so that there can be more investment in the system.
Talking about managing inflation, the CBN 6 consecutive times during MPC meetings increased the MPR rate from 18.75, where the present governor of the central bank, Oyinpreye Krumale, met it, it came to 27.5%. Now, the Treasury bill could be a tool to actually manage inflation, in the sense that it also helps to mop up cash in circulation, because the CBN has always been understands that the inflation experience in Nigeria is demand push. Why do you think that, or do you think the CBN could have used that opportunity and accept all the subscription for it as a way to mop up the excess cash in circulation?
You have to look at it from both angles. I understand your points, but like I mentioned, government is also looking at its cost of borrowing, because the cost of borrowing for the government is important. You affect the fact that the government had a huge debt. So, and definitely those debts have to be serviced. If the government continues to increase its cost of borrowing, it means we need a lot more money to service the debt, and that is at the expense of other developmental projects. So the government has to look for a way to manage that area. Then, as regards the liquidity in the system, the CBN has done a lot to mop up liquidity. And I also mentioned the fact that there are other measures the CBN can also use to mop up liquidity. Beyond the Treasury auction, you also have the OMO market that they can also use to mop up liquidity. Also, the debits, the CRR debits, they can also use that to mop up liquidity. And there are other measures, the other tools at their disposal they can use to manage the liquidity within the system. So I think they don't just want to overlabel one of the tools that is available, looking at the impact it will have in the system.
All right, well, thank you so much, guest, for being with us on the show today. Vincent Oshoma, financial investment analyst and acting MD, Midpoint Capital Limited. Before we let you go, just one question regarding asset management. So the pension funds and the PFAs using their discretion to manage pension funds. What would you advise in that regard, so that maybe those who are putting funds there, the pensioners, perhaps need to have a say regarding what investment their money is being put to, or become active participants in that regard?
Yeah, to some extent, they have a say, because for the pension fund, you have the different funds that they manage, and there are different people. They don't just put all the monies in one fund, depending on the age and depending on the personality, person of the investor, person that they are dealing with. They have determines the fund that they put the person. And we have seen some development, some change in policy from when the fund started. Because remember, when the fund started, there was a time they have to take more people into the relatively more risky fund for you to grow their portfolio, so that they will not just invest in only fixed income instrument. Then you also saw the policy of trying to give people opportunity to access 25% of their fund for real estate investment. And I think there are also more policies that are coming up to be able to make it, to be able to give opportunity to investors to access their fund. I think as much as we want to see more be done for, we also have to recognize the fact that this is something that is still relatively new. We need to have some level of stability before we start over tweaking these policies, so that we don't teach it into trouble. We don't repeat the same problems that we're trying to solve, which led to the institution of these funds, so pension funds. So I think they have to look at those things. And there's a lot that still we expect to see, because now when you look at the fund, a lot of the money, money in the pension system, a lot of the money is invested in government instruments with fee, and there's a limit to what the return they can get. Their fixed income instrument. So we expect to see them go into other instruments that will give better returns. And the PENCOM is looking at those things in terms of discussing with different stakeholders to see how they can be able to structure some things that, as much as you want to increase the value of the investment, you don't throw investment into jeopardy, so that when people need their money, they don't start telling them stories.
Vincent Oshoma, financial and investment analyst, we thank you so much for the brilliant submissions that you have made here on the show today. We hope to have you some other time soon and look at other areas within the financial sector in Nigeria.
Thanks for having me.